This black question is a typical financial statement question. It is a trial balance with a list of 19 or 20 accounts, each having a debit or a credit balance. And you're asked, the requirement of the question is to prepare an income statement for the year ended 31st of December 2019. And B is to prepare a statement of financial position as at the 31st of December 2019. So my first piece of advice would be, when you're doing the financial statement questions, is pull out the template income statement and the template statement of financial position from the notes, from the lecture notes, and have them by your side when you are doing them. And then secondly, what I would always do before attempting to start the question is I'd go down through the trial balance and identify whether each account is an asset, a liability, or capital. And if it's an asset, liability, or capital, it'll appear in the statement of financial position. And if it's an income or an expense, it will appear in the statement of the income statement or the statement of income. So first of all, I'm just going to go down through the classifications, and we have sales. We know that sales will be a credit balance. Sales is an example of income. Therefore, it will appear in the income statement. Purchases is a debit balance. It is an expense. Purchases is an expense, as it is a cost that is incurred in the running of the business. It is an expense that will appear in your income statement. Not forgetting that your income statement will outline all the revenues and expenditures for the entity for a given financial period, and a statement of financial position will show the assets and liabilities and capital in place in that entity as at the end of a financial period. Salaries is a debit balance. It's a debit balance. It is an expense, and it will appear in the income statement. Not forgetting our classifications. Any debit balance and any credit balance. Any debit balance will either be expenditure, or it'll be an asset, or it will be a drawing. Any credit balance will either be income, it'll be a liability, or it will be capital. And just splitting that out further, the financial statement that income and expenses appear in is the income statement or statement of income statement. And your assets, your liabilities, and your drawings and your capital will appear in your statement of financial position. I find it very useful to write that out at the start of a question, and therefore it should guide and direct you to where the account should be posted in the financial statements, financial position. Okay, so back to our fourth account, we have a debit premises balance. And premises is an example of an asset. An asset is something that you own, and an asset appears in the statement of financial position. Drawings, a debit balance. Drawings is a debit balance, and it will appear in your statement of financial position in the equity section or in the capital section. Rent is a debit balance that is an expense, and therefore it'll appear in the income section. Carriage inwards is a debit balance, is an expense, and will appear somewhere in our income statement. Light and heat is an expense, and therefore it will appear in our income statement. Returns outwards is the equivalent, is the same as a purchases return. So that is purchases return, and that will come off, that will be deducted off our purchases figure, and therefore it will appear in our income statement. Trade receivables is another name for a debtor, A debtor and a trade receivable is an asset, and that will an asset appears in our statement of financial position. Insurance is a debit balance. Insurance is an example of an expense being a cost incurred in the running of a business. That will appear in your income statement. Computer equipment, debit balance. A computer equipment is an example of an asset that you use and you own for the purposes of your business. So that will be appearing in your statement of financial position. Cash at bank is a debit balance, is an asset. It will appear in your statement of financial position. Business rates is an example of an expense. You treat it exactly like you would your insurance, your telephone bills, etc. Therefore appears in your income statement. Trade payables is another name for creditors. Creditors and trade payables is a credit balance. Therefore it's a liability and will appear in your statement of financial position. Your van, your motor van is a motor vehicle. It's an asset. Something that you own is a debit balance, and therefore it'll appear in your statement of financial position. Returns inwards, another debit balance is another expense. Sorry, it was carriage inwards. I was thinking return inwards is a debit balance. Returns inwards is another name for a sales returns, and therefore is netted off your sales figure, and therefore will appear in your income statement. And your carriage outwards, it's a debit balance, it's an expense, and will appear in your income statement. And just to note, we have carriage in and we have carriage out. Carriage in forms part of your cost of sales figure, and carriage out goes in your expenditures section in your income statement. And finally, capital is a credit balance. Therefore, it will appear in your capital section in your statement of financial position. And you're given an additional note that you are told that the inventory, your closing stock balance at the end of December 2019 was €30,000. And just a pointer with regards to notes under financial statement, under a trial balance. If you have an account in a note format, what it generally will mean, it will go into your financial statements twice. And your closing balance first goes into your cost of sales figure in your income statement, and it also goes in as an asset in your statement of financial position. Okay, so at this stage, we went through the list of accounts. We've identified whether it was an income, a liability or capital or an expense or an asset or drawing as per the box above, and also identified what financial statement that account will go into. Okay, so part A of the question is to prepare an income statement for the year ended the 31st of December 2019. Titles and headings on financial statements are exceptionally important for clarification. So we have the income statement, for the year ended 31st of December 2019, and that is your first port of call, the heading on your financial statement. Okay, so then you will have you'll have two columns for a subtotal and total, and you always put the currency that you're operating in at the top so that people know what currency the financial statements are prepared in. And from the template financial statements in your notes, you will see that you always start an income statement with the sales figure. And I'm going to tick off the trial balance as I go along to denote that I have dealt with that particular account classification. So our sales figure is €405,000. And from our sales figure, we will take off our sales returns figure. So we have less returns inwards. And our returns inwards figure is €3,000. I want to put that in blue. So we'll have our net sales figure of €402,000. And that is how we start the income statement. We always started with our sales less our sales returns, or our returns inwards figure. The next heading on an income statement is the cost of sales figure, or the cost of goods sold, and that goes in as a heading. So we go less cost of sales. Less cost of sales or less of goods, cost of goods sold, exactly the same thing. So that is a heading within our income statement. And the first figure that features in our cost of sales figure is the purchases figure. So our purchases figure is €250,000, and we take that off as we go. So now we're using the left-hand column because we are identifying or determining what our cost of sales figure. It is a subsection of the trading section of our income statement. So off our purchases figure, we take off our returns outwards, or our returns, our purchases returns, in order to get the net purchases figure. So you'll take your returns in and your sales returns away from your sales figure, and you'll take your purchases returns or your returns outwards away from your purchases figure in order to get the net cost or income to the business. So our returns outwards is 2,700. I'm going to tick that off as I go along. So our net purchases, the net cost of the purchases to the business was €247,300. The next element of the cost of sales figure is our carriage inwards. So we have to add in our carriage inwards figure. So carriage in goes into the cost of sales calculation, and carriage out goes in under the expenditure section. So we've carriage inwards, and that is €600. Put that in blue. So our carriage inward figure, which is an expense, is €600. So we add that on to our net purchases figure, which gives us a total of €247,900. And our next figure that forms part of our cost of sales figure is we deduct our closing stock or closing inventory figure. And we were given that as a note to the accounts, so I'm going to tick that off. Once any figure that is listed as a note to the accounts or note to the trial balance should be entered into the financial statements twice. So that is the first entering of it. We're going to deduct our closing inventory figure. And that will give us our cost of sales figure, 247,900 minus 30,000 gives a cost of sales figure of €217,900. And our gross profit is made up of our sales less our cost of sales figure, COS being cost of sales. So our gross profit is 402,000 less our cost of sales figure, which is 217,900, which gives a gross profit of €184,100. And that is the trading section of our income statement completed. The top part is referred to our trading section. So then we are going to deduct the remainder of our expenses, and that is referred to our expenditure section. So the heading now we have is we have less expenses. So we literally go through all the expenses that we had identified and list them in the expenditure section of the income statement. So our first expense that we identified was salaries, which was 45,000. Then we had rent of 1,000. Then we had light and heat of 1,950. Then we had insurance of 1,800. I'm just going to tick them off and list them all together. Then we had business rates, 2,350. And then we had our carriage out figure. So carriage in goes into the cost of sales figure, carriage out goes into the expenditure section, €750. So that was 6 expenses. I'm going to write them all in now. So we had, from our trial balance, we had salaries, 45,000. We had rent, 1,000. We had light and heat, 1,950. We had insurance, 1,800, all coming from the trial balance. We had business rates, 2,350. And our final expense that we had listed as in the expenditure section is carriage outwards. And that was €750. So the total of those expenses is 45,000 plus 1,000 plus 1,950 plus 1,800 plus 2,350 plus 750. So our total expenses that we have in our expenditure section is €52,850. And our gross profit less our expenses gives you net profit. So net profit is your gross profit less your expenses. So our gross profit is 184,100, and our total expenses in our expenditure section is 52,850, therefore giving us a gross profit of €131,250. And that is the income statement done, or the statement of income done for Fred Black. Okay, so what I'm going to do now is I am going to do the statement of financial position. So as you can see, as we move through the trial balance, we've ticked off all the accounts that we have entered in so far, and now that means that the remaining balances that are unticked must go into the statement of financial position. So now we will look at part B of the question. Again, you should always look at your template in your lecture notes for both the statement of income and the statement of financial position, and you shouldn't go too far wrong. So we have the statement of financial position. Dates are very important, and we've as at the 31st of December 2019. So we always start our statement of financial position with our listing of non-current assets. So our non-current assets are those assets that we anticipate that we are going to own in the business for a period of greater than a year. So what would we classify as a non-current asset? We would classify the premises of 180,000. We would classify the computer equipment of 4,600 and also the van, 20,000. Because we use those to help generate business. So the likes of fixtures and fittings, premises, land and buildings, they would all be examples of non-current assets. So again, I'm going to split this into two columns. So we had identified our non-current assets as premises, 180,000. We had computer equipment, 4,600. And we had a van, which was 20,000. So the total of our non-current assets is €204,600. So then our next heading is current assets. So we've dealt with our non-current assets. So then we move on to current assets. And a current asset is any asset that you own that you expect that will be turned into cash within a period of 12 months, so within a year. Current assets. So again, you'll be identifying the current assets as anything that you own and is convertible into cash within a period of 1 year. So first of all, we have what have we got? Our debit balances. We have our trade receivables, the €54,096. We have cash at bank, 34,312. And also there's no other debit balances that we haven't dealt with. The only other one there is drawings. That isn't an asset. The only other current asset that we'll have is our inventory. We had identified at the start, it goes in as an asset. So in this question for Fred Black, we have 3 current assets. So we have our inventory, which was €30,000. We had our trade receivables, which was 54,096. And we had our cash at bank as per the trial balance of €34,312. And the sum of those 3 current assets is €118,408. So now the next part of the statement of financial position, we will look at our liabilities. And next heading will be current liabilities. And a current liability is any amount that we owe to someone and we expect that we'll have to pay them within a period of 12 months. So not forgetting that a current liability or a liability will have a credit balance. So we look through the trial balance and identify any credit balances that we haven't yet dealt with that might be a liability, and it might be a current liability or a non-current liability. So an example of a non-current liability would be a 5 or a 10-year bank loan, meaning that we'd have to repay the bank in a period of greater than 1 year. But current liability is anything that we expect that we are going to have to repay within a period of 1 year. And that the only balance that we have here is trade payables. Trade payables our creditor balance. So we go down and we put that into our statement of financial position. And we have our trade payables of €24,758. So now the next piece that we calculate, we take our current liabilities away from our current assets, and the figure that we get there is called our net current assets. Our net current assets is simply our current assets minus our current liabilities. So that will be €118,408, which is our current assets figure, less €24,758, which is our current liabilities figure. So that gives a net current assets of €93,650. And the next thing that we do in the statement of financial position, we simply add that on, or we add on our net current assets to our non-current assets, and that will give us a net assets figure, which is our non-current assets plus our net current assets. So our non-current assets is 204,600. Our net current assets is 93,650, and that gives us a total net assets figure of €298,250. So our net assets figure is €298,250. And that is the top part of our statement of financial position. So now what we have to do is we have to complete the statement of financial position. We have to try and get the bottom part of the statement of financial position to equal to the top part. So at this stage, the only figures that we have left to input into our financial statements is any figure that hasn't been ticked. And we can see that we have two figures there. We have our capital figure of €205,000 and our drawings figure of €38,000. And there's another figure that goes into the capital section, and that will be our net profit of €131,250, and it is the net profit that links our income statement to our statement of financial position. And if it was a net loss, you would put that in as a net loss. So the next heading on our statement of financial position is the capital section. So we have our capital of €205,000 straight from our trial balance. We have a plus our net profit. So we have plus net profit of €131,250, which is coming from our income statement above. €131,250. And the last figure that we have to enter into the capital section is we take away our drawings. So we've seen during the double entry transactions, capital is an injection of money into the business, and drawings is taking money out of the business for our own personal use. So the total of our capital section is €205,000 for the capital, plus a net profit of €131,250, taking away our drawings of €38,000, given us a total in the capital section of €298,250. And that is the first, an introduction to financial statements question, stereotypical kind of question, the Fred Black. And you can see here that our books are balancing.